The Bank Secrecy Act is the primary U.S. anti-money laundering law, and it was passed in 1970 by the U.S. Congress. Its intention is to help in the combat of money laundering and terrorist financing and establishes record-keeping and reporting requirements for financial institutions. Banks are responsible for establishing policies, procedures, and guidelines for maintaining compliance with the Bank Secrecy Act. This includes reporting cash transactions over $10,000, record keeping, and reporting suspicious activity to law enforcement. In 2001, the U.S. Patriot Act expanded the AML regulations in the United States. Notably, this included expanding the definition of financial institutions. In addition, it established civil and criminal penalties for noncompliance. The Patriot Act requires banks to respond to regulatory requests for information and also enables the regulatory bodies to consider their AML record when evaluating bank mergers and acquisitions. Compliance approaches will depend on the size and complexity of your institution. Typically, larger banks have a more diverse customer base and different types of products. In turn, they'll require more human resources and more sophisticated technology to maintain compliance. An effective compliance program has 5 pillars. Those include a designated person responsible for day-to-day compliance, policies, procedures, and internal controls, independent testing, training of employees, and customer due diligence procedures. A strong BSA AML compliance program includes adherence to the 5 pillars, as well as a leverage of technology to streamline processes and reporting. There are a handful of things that examiners look for when assessing compliance with your BSA AML program. These include a culture of compliance across the organization, risk-based procedures, and an understanding of your customer base. Boards are responsible for approving your BSA AML program and establishing a culture of compliance within your institution. Boards are also responsible for ensuring policies are adhered to and that management has access to the resources they need to maintain compliance. A couple questions that boards might ask about their BSA AML compliance include what were the previous audit and exam findings, as well as an inquiry with management as to whether they have enough training and resources. With respect to board reporting, you can expect to see your BSA AML program, your risk assessment, the results of your independent testing, and the results of your regulatory exams. Also, monthly, you can expect to see a report on suspicious activity reports filed, as well as the status of any audit or exam findings. Non-compliance or weak compliance with the BSA can impact your ability to execute on your strategy in a couple of different ways. First, it may prevent you from moving forward with some mergers and acquisitions. Second, if you have a product that's causing BSA compliance problems, you may have to stop offering it. Ramifications for compliance weaknesses can go beyond just fines. You may face civil and criminal liability, both as an institution and personally. When deficiencies have been identified in your BSA AML compliance program, the board is responsible for ensuring those deficiencies are resolved and ensuring management has access to the resources they need to execute on those deficiencies within your institution.